Hi, this is Ryan Calloway with AZ Health Insurance Brokers. The purpose of this video is to discuss 5 common mistakes to avoid when setting up a group plan. So the first thing to be on the lookout for is who you're not only working with as a carrier, but what networks and plan design you're going with. So carriers, and you go with United, we'll actually use United Healthcare as an example. There are plenty of other providers in the state, but they're a good example. So what you want to avoid is over or underpaying for a network that you either need or don't use. And a good example of this is if you roll out a United Healthcare plan, you can choose between Choice Plus or Core network options. They're the exact same, but Choice Plus includes Mayo Clinic. So the question is, do you need Mayo Clinic? If yes, the Choice Plus is going to be about 8% more. If not, you might save a couple points by not incorporating that. So just an example of something to think about where, hey, do I actually need this? And does it actually make sense to pay for something that we may or may not be using? Number 2, typically we see contributions as an oversight. So try to think long-term, and the advice I always give is that once you give, it's hard to take away. You do need to be on par for your industry, but you do need to assume an increase every year. Unfortunately, the cost of this is not going down, it's going up. So how you decide to contribute should be a long-term strategy. And know that if you're gonna pay a lot towards your insurance for your employees, you should have the mindset that you have to continue that, because again, taking away would be a challenge. Third is employee education. So what is your broker doing to help not only engage with employees, but make sure your employees understand the insurance? And that can actually be one of the most difficult barriers with insurance is getting your employees to actually understand how the plan works. But fundamentally, that's how you get the employees to use the plan more intelligently and how you keep your claims down over the long run. So, another mistake maybe is offering too many plans, which can be just as beneficial as leaving critical benefits out of the pool. It's nice to be able to offer new things on an annual basis. So, but similarly, you don't want to overwhelm these employees with every option under the sun prior to giving them some sort of education so that they understand what they're opting into or out of. And then offering the right benefits, kind of on the same tier, giving the right amount of options and variety without overcomplicating things. On the medical side of things, 3 plans it's pretty traditional. You can offer 2, you can offer 4, but we see 3, good, better, best is typically a good rollout. And then the addition of voluntary products like dental and vision. Don't underestimate the value of these products. Typically employers offer them on a voluntary basis, which means it doesn't cost the employer anything, and it's a free value add for your employees. So in my opinion, in most cases, there's no reason not to offer at least dental or vision, and you can look at other products too, like disability and critical illness and accident, etc. And then the 5th would be choosing the right broker partner. Right? This is an extremely important point because your broker is going to be the one that says, hey, I think this is what you should do based on your SIC code or your company culture, etc. You should roll out XYZ benefit. This is what I see as traditional in your industry. So they really should have their finger on the pulse and be able to make really strong recommendations for plan design, plan offering, contribution strategies, everything that we discussed. So to wrap it up, thank you. This is Ryan Calloway with AZ Health Insurance Brokers.